Hello and welcome to the Corporate Storytime podcast series. My name is Lucas Robinson, the host of the podcast. On this pod, I'll get the opportunity to talk to ASX company leaders and innovators as they run through their personal executive journeys and the stories behind the companies they are helping to grow today. I'll be leveraging my experience as a former stockbroker and my current role with investor relations consultancy, Corporate Storytime. But enough of that. For now, let's gather round, come in close, and let me tell you a story.
Hello, welcome back to the Corporate Storytime podcast. Today we're here for a chat with Alex Rovira, Managing Director of West Australian gold producer, developer and explorer, Brightstar Resources. Brightstar owns gold assets in the Laverton and Menzies districts of Western Australia and delivered a scoping study last year which examined the idea of producing gold from these two production hubs and the refurbishing of the company's Laverton gold mill, which is currently under care and maintenance. More recently, Brightstar has announced the intention to acquire Linden Gold, which is currently producing from the Second Fortune gold mine, also in the Laverton district. I've wanted to get Alex on the podcast for a while. Corporate Storytime's background with the company goes back to working with King West Resources, which owned the Menzies Gold Project and merged with Brightstar about a year ago. And as Alex will tell you, there's been a lot going on over the years since. In fact, I can hardly believe it's only been a year, given how much change has occurred. Mate, welcome. Before we get onto the Brightstar story, just a little on yourself. How would you describe the career journey which has seen you arrive at Brightstar as the Managing Director?
Thanks, Lucas, and thanks for having me on. So, interesting question. I suppose it's not a conventional background and into a managing director role, I suppose, for my peer group there. So, from a background perspective, I completed studies in geology and finance at UWA, or feels like a long time ago now, and essentially went straight from that educational background into corporate finance and investment banking. So using my geology and resources background, essentially the majority of my work in that career was to do with the metals and mining industry and was principally around capital raisings and M&A activities. So that really gave me essentially about a decade of experience in investment banking for the metals and mining sector, working with boards and senior management teams to deliver corporate outcomes, looking at growth opportunities, IPOs, M&A, things like that. So I had a really good grounding in, I suppose, aspiring towards value creation through some of those opportunities, the capital markets, the importance of, working with, key stakeholders from the equity capital markets perspective, the brokers, the institutional fund managers, and shareholders, and really, catering to all parts of your capital structure to try and achieve your objectives. So that was really the background of my, I suppose, first 10 odd years of my work life. I was working with Brightstar as a corporate client at the time, working with the previous management team.
Yeah, I was going to ask where the Brightstar opportunity sort of first came across your desk.
So great question. So I was familiar with the assets in the company for a while. In, I believe it was 2020, they sold a non-core asset called Ben Hur to Regis Resources, and essentially used the proceeds from that transaction to clean up the whole business. In short, they had some debt in the company, they had some equity owned by some offshore Chinese interests, and they used successfully that transaction to clean up, the debt overhang, the equity, rebranded the company from what was then known as Stone Resources to Brightstar. Changed the board, changed the management team, essentially just pressed refresh on the company, and really gave the company the ability to pursue adding value to the resources and the assets that they do have. And that's when I essentially got involved from a mechanical perspective, was helping the company with some of that advisory work, but probably principally more importantly was to do with raising capital and getting the company set up for achieving its goals, which is good to see. They hired a very experienced exploration manager, came in, pulled apart the resources, re-put them back together, drilled a lot of holes into it, principally at the Corkscrew Well deposit, just showing that what was there is actually there and that there is a lot of upside. So I was working with the company for a number of years from that perspective, and it was really exciting. It was good to see them essentially take a company that was all but moribund into a successful junior explorer, and I suppose that kind of was the start of the journey, I suppose, for where we are today in terms of trying to look at other opportunities, trying to continue to grow the company. It had a fantastic platform to build a business. Having at the time 460,000 ounces, and importantly that the processing plant that we have now on care and maintenance in Laverton really is the backbone, I think, for building a proper business from a gold producing perspective in and around that Laverton hub. So, I think they had a great platform for growth, and I've certainly been trying to add to that there since.
I mean, you talk about the plant. When was it first commissioned? What sort of capacity do you envisage it can get to with the scoping study plan that was brought out last year? And what are your hopes for it, in the longer term as Brightstar sort of looks towards a 100,000 ounce a year type of a production profile?
Yeah, so great question. So when Stone Resources built it in the late 2000s, kind of 08 to 2010, that ran for a number of years, processing material from the Beta project and the Alpha project that sit within Brightstar's portfolio. That was ultimately shut down and put on care and maintenance about 2012. And essentially from 2012 onwards, up until 2020, there was minimal work conducted on the actual assets in the ground. So there is the better part of a decade gap there where there was limited exploration activities actually conducted. So again, speaks to the opportunity for us as the current company, I suppose, with respect to that more or less 10 years where there was limited exploration. So that plant's been on care and maintenance. The previous company, when it was Stone Resources, did spend a lot of money on the plant. For example, they put in a brand new ball mill and never turned it on. They put in a brand new gravity circuit, never turned it on. So there's a number of things that were actually money spent on that plant subsequent to it going into care and maintenance that are all assets and value for our company. There's tangible things that you might not think about, but things like the haul road network is excellent. You can't sell a haul road, but it's capital that we don't have to spend to ensure that we get ore from Alpha or Beta or Corkscrew Well or wherever it might be into the plant. There is an existing tailing storage facility there. We have the capacity to put a lift on that and get some tailings capacity there before you actually have to go and incur the capital costs for putting a new TSF in. So again, these are the kind of things that we're all the beneficiaries of here as shareholders of Brightstar, essentially because of the work done under the previous management.
Yeah. And I think you put it well in some of your communications to the market where you've estimated that the replacement value of the mill might be in the realms of $60 million, but to get it back in production, you're sort of looking at 18.5, according to the scoping study numbers. So you can see the tangible value gap there that you get from having that asset under your care.
Yeah, exactly right. Look, we're keen to try and get that valuation done by an independent third party infrastructure valuer to really see what the replacement cost would be, just to articulate to the market, I suppose, the true value that we do have there. The work that we had done in the scoping study last year for refurbishing and expanding the mill, getting it to 500,000 tonnes per annum throughput for fresh rock, for a sub 20 mil capex, is a fantastic result for us. I think a good landmark kind of example for that would be the PFS that Musgrave Minerals put out last year. That was a similar plant, 500,000 tonnes per annum. The quote for the plant alone was $70 million. So, on a like-for-like basis, that a brand new one was going to cost 70. We need 18.5 to get one that looks the same. You can kind of see some form of see-through value there from a financial perspective. And the big things like permitting, it's obviously an existing mining license, got an existing tailing storage facility. From a timetable perspective, we don't have to convert ELs to MLs. So we're saving ourselves 12 to 24 months, a lot of cost and a lot of hassle. So it is a very important asset for our business. And certainly at the moment, the studies that we're doing as part of our current pre-fees is looking to turn that on in the best manner possible.
Yeah. I mean, everyone can see that what a great asset it is to have a processing infrastructure ready to go with fairly minimal capital spend to get it up and going and restarted. M&A has obviously been a really big part of the corporate strategy. I talked a little bit about the Menzies acquisition, but more recently, the Linden Gold Alliance story sort of come to the fore. tell us about what attracted you to that opportunity and how that actually provides Brightstar an ongoing production profile.
Yeah, look, it's a great question. I suppose it is part of my management philosophy here to continue to try and unlock value organically with our own exploration, but importantly inorganically too. And I do see there is a lot of opportunities in the current West Australian junior gold space as a function of how challenging the equity capital markets are. It is difficult for some small cap explorers to get market traction. It's difficult to raise capital. We've seen the traditional institutional landscape really move up the risk curve. So, things with bigger market caps, more liquidity. There's limited professional capital coming down the risk curve to play the juniors like there used to be. And because of that, that means there are opportunities. For example, King West, the transaction that we executed when I executed coming into Brightstar, I think the equity value for that business we paid was circa $10 or $11 million. That Selkirk mining campaign that we've done has netted $6.5 million net to Brightstar.
Do you want to just talk about that Selkirk sort of campaign that you did and what the structure was like and obviously the fact that you were able to sell gold at such an opportune sort of time in the cycle?
Yeah, great. Yeah, absolutely. So good question. So that's engagement with BML was pre-existing prior to, I suppose, the Brightstar company involvement from King West. And the BML guys did a great job. It was a 50-50 profit share joint venture. They managed it like it was their own money because it was their own money. So they did a great job in terms of doing things as economically, as efficiently as possible, and really set the background for the successful outcome that we saw. We were the fortunate beneficiary that we mined more tons than was in the model at a better grade. We had better recoveries, and the gold price ripped by about $400 an ounce. So, all of those things were great tailwinds for us. We had wins on every front. And that really delivered that successful outcome of $13 million profit to the joint venture in circa 6 or 8 months of mining. So
from the production of how many ounces?
7,500, maybe a nudge over. So it was a great outcome.
It's an amazing outcome. Without Brightstar shareholders taking on financial risk, to be able to sort of procure $6.5 million in profit that goes straight into the ground of developing a bigger and better business.
Absolutely. And case in point, we mined 7,500 ounces post this transaction with Linden. We're going to have 1.4 million. So it's not, for me, the concept of it from a financial perspective made sense, but also, you're not sterilizing value. We're not taking a little bit of a bigger pit. Selkirk was defined in its own right. It was a limited opportunity. It was highly successful. We are looking at other opportunities at Menzies, for example, to do another one. This particular area called the Link Zone that we've been putting some holes into recently. We feel there is a similar opportunity for something of a similar scale. So really moving that forwards towards some form of decision in the coming months, and hopefully something we can get into in the back end of this year. That is still all pending. We're currently drilling at the moment, so pending some results, pending further optimization work done on the pits. That is a very small oxide, shallow resource from surface that's nice and wide. That could be a good opportunity. So what we're proposing to do there, and similar to Selkirk, as I said, is you're not taking away from the bigger picture, the bigger development story. So we still have everything running in the background in terms of the pre-feasibility studies for the consolidated company. So that is, the Menzies Gold Project, Brightstar's existing gold project, and the Jasper Hills project that we're acquiring out of Linden. There's a lot of facets to this business that I really like. Like, we've got the operating second fortune mine, we've got potential near-term opportunities like the Selkirks or Link Zones, and then we're building a business that is going to go through the feasibility study and development approach for a conventional build. I think there's a real opportunity there. So, long answer to your question. From an M&A perspective, I still think there's opportunities. One of the biggest arbitrage opportunities I can see in the market at the moment is taking a exploration ounce that's valued at $10 or $20 an ounce in the ground and trying to advance that towards it being a mineable ounce. And then you can see the re-rating you can get from that as you get towards production. If you can take an ounce that's worth $10 an ounce in the ground to it being worth 100. There's that value uplift, you don't necessarily need to have mined it to capture that. Like, I think you need to prove to the market that you've got the financial and technical capability to execute it in a short period of time, and that's when you kind of get valued on those ounces more so than you would if they're just inferred ounces sitting in an MRE somewhere. So that is the ethos here, is taking some of these resources that we do have and taking them towards mining decisions.
Yeah, I mean, and you've got a good slide in your recent presentations talking about the average on the ASX for production ounces being worth about 5,000 per ounce Aussie. So if you are, if you have got your heart set on getting to 100,000 ounces a year, that's obviously a huge uplift in value from where the company sort of trades at in a market cap perspective at the moment. But I know that I kind of started asking about Linden, and then we diverted off into talking about Selkirk and those sort of smaller scale opportunities that exist at Menzies. Do you want to get back to the rationale behind the Linden transaction and what gets you excited about the opportunity that's been presented there?
Yeah, absolutely. So I've known those assets and the guys behind them for a period, for a year or two now. So certainly Andy Rich from Linden's perspective and Ashley Fraser from what was called Lord Byron Mining, and interestingly enough, Lord Byron and Linden merged themselves last year, so they became one company. But in short, I knew of both of them at the time, both private, both one's Jasper Hills. Is an advanced, almost development ready open pit and underground. And obviously Linden's got the operating Second Fortune mine. So what gets me excited is the ability to have a producing asset that's cash flow generative with a development ready project that's got the critical mass and scale to allow us to fast track the refurbishment of our mill and support that development. So it was really, it ticked a lot of boxes for us as a business. So, having Second Fortune in operation, and I'll touch on Second Fortune in a moment, but that's a big tick. And then having the ounces in the ground at Jasper Hills, you only need to look at the map that we've got in our slides. Jasper Hills has a permitted, wholly owned haul road that goes from their project essentially to our mill. It's uncanny. So it was a logical combination at some stage. Those guys have done a good job. They've mined it previously under Blue Cat Mining, the Lord Byron guys. So, that was mined as recently as 2020. In terms of the drilling database, the metallurgical test work, it's been mined and milled. Like, we know how it performed. Second Fortune's been operating under Andrew Rich for the better part of 2 or 3 years now, successfully. They've processed 21 parcels through Gwalia. We know the tons it can produce. We know the grade it produces at. We know the recoveries and the network. So there's a lot of known knowns. And that, again, it just takes the risk out of M&A. We're not buying something that we didn't understand. We were buying something that truly is synergistic. It's a funny buzzword that gets thrown around in M&A a lot, but in this circumstance, it truly was. I mean, the ounces are close to our mill. It's close to our infrastructure. It supports the refurbishment. It supports the expansion, the upgrades. It gives us an operating cash flow mine as well from Second Fortune. So really excited to see what the combined group can actually achieve here. And I think it really is complementary with respect to management teams. The Second Fortune Linden team have done an exceptional job mining that. And I'm really keen to see how we can assist them, I suppose, optimizing and enhancing the outcome from Second Fortune. There's no bones about it. It has been challenging for Linden to run that as a private business. Access to capital is challenging. Mining, starting an up and around mine's capital intensive. They've been fortunate to have had St. Barbara there as a very supportive stakeholder, both from originally a debt perspective and converting it to equity, and who will now become a very large, Brightstar's largest shareholder post this transaction. St. Barbara are contributing to the capital raising for $2 million. They're very supportive. They were happy to be voluntarily escrowed. They would like to see us grow a big business. So look, Linden have done a great job to get to where it is, and I'm excited to see how we can help optimize that, but also how Linden themselves and the technical services team in that business can assist Brightstar. We do have underground mines we want to try and build. Yundaga at Menzies is a great example. That's on the development block in the next kind of year or two. We could do with the skill sets that the Linden team have.
So you've not just acquired some great assets, but some great shareholders and some great executives as well. Do you want to? And I know that you've also acquired. We can talk about that now or later. A new chairman as well. But some of the new people in the organisation, Andrew, Richard Crooks, who's taken on the chair. Do you want to just touch on their backgrounds and what they bring?
Yeah, absolutely. Look, Andrew is the current managing director of Linden, an exceptional underground miner, very well regarded, lovely bloke, good leader, and he's done a good job with Linden building that mine. So for us to get his commitment to our business is huge. I see Andy as a future leader of the industry, similar to Dean Valve, our current COO. I think they're both very skilled mining professionals with enormous futures in this business. So we're blessed to have guys of that caliber in this company. Ashley Fraser, who's the chairman of Linden, was the original vendor of the Jasper Hills projects. Ash has got a great history in private mining services businesses. He's run open pit mining contractors. He was involved in a big M&A outcome with his mining services business that got acquired by Emeco a number of years ago. So, he's got a different skill set to, I suppose, Andrew and myself and everyone else on the board in terms of actually running open pit mining contracting businesses, knowing where the bodies are buried, how things actually work, what I would term as genuine real world mining and operating experience, having hundreds and hundreds of employees and balance sheets and the hundreds of millions of dollars of equipment, debt, equity, all sorts of financing structures. Having seen all that, and again, private business is challenging. So I think it's a different breeding ground to the ASX. So Ash brings a completely different skill set to this company. We were very fortunate to get Richard Crooks to join us as chairman. I'm really excited to get Crooksy on board. Someone that I've, I suppose, looked up to in the industry for a long time, someone I've done business with previously. When I was trying to think about who would be a very credible chairman that's got the skill sets that we wanted. It was very challenging to go past someone of Richard's caliber and his background. Geologist by background originally, but spent his entire career thereafter in very high profile roles in investment banking and finance. With EMR Capital and then with Macquarie. He's the chairman of a couple of companies now as well on the ASX. So got great corporate governance, financing experience, and again fits the mold of just being a great bloke. I suppose is one of the key caveats we've got here is the hiring policy of people that are good blokes. So
that's generally a good starting point.
Yeah, so I can see from my perspective, wearing a markets hat, we've got guys that have got underground mining experience, open pit mining experience, financing experience, ASX experience, running successful private businesses. They all bring different skill sets. And I think from a board and management perspective, for me, it's exciting. There's a board and management team here that are all leaders in their own right. So, I think is only going to benefit the shareholders of Brightstar.
Yeah, that's great. Well, we've been through some of the background, some of the corporate strategy, some of the people. I suppose what's happening now, my understanding is that there's a big sort of RC and DD drilling program underway and a PFS that's well and truly in train as well. What's coming up?
That's correct. Yeah. So look, we've got a plus 30,000 metre drilling program that's already started. It's commenced. So we've been drilling at Menzies for a little while now. That program will go for the next circa month, I believe. And largely that's done in and around the link zone, trying to get that towards some form of final investment decision in a few months. And primarily the Lady Shenton open pit. So we're seeking to bring that in on 20 by 20 metre spacings, enable us to get all the material into measured and indicated status so we can declare a reserve as part of the PFS. Menzies is well understood. That Lady Shenton open pit in the scoping study was plus 100,000 ounces essentially in one pit. A fantastic ore body that is going to make a lot of money, that does make a lot of money. So important to get that, the drill spacings right, so we've got the right geological confidence as part of the PFS. That rig then rolls up to Second Fortune. It'll do some pre-collars, which will then have some diamond tails underneath that. So that'll essentially enable us to poke a bunch of holes into the Second Fortune ore body at depth. That is important for me coming into it because it'll give us confidence in respect to the current ore body continuity at depth. If you take a step back, Linden's obviously been a private company. It's had no need to drill out, much more than 12 months ahead of its own nose. So, private business doesn't have the capital, nor does it need the capital to drill things out, for years and years in advance. In the ASX public markets landscape, I think it's important. So we're going to put some holes into that so we can actually extend the resource at depth, put it on close enough spacings that hopefully we can be declaring reserves again ahead of Second Fortune's mine life so that we can actually talk to guidance. Obviously, in the current reporting requirements under the JORC code and ASX listing rules, it is rather challenging to put out guidance when you don't have all reserves declared. So, important for us to have that geological understanding. It'll also enable, better and optimized mine planning decisions. So that's important. So that'll be that diamond and RC rig there. It'll then go across to Jasper Hills and do some meters at both Lord Byron and Fish. Similar to the Menzies program, again, it's largely infill with a bit of extensional. We're going to get some met holes done, basically getting everything up to towards the ability for us to make FID early next year. So putting everything into enough drill spacings that we can declare reserves, got sufficient met and geotech work done on things. Again, we'll get a rig. That rig will then go up to Cork Well. Obviously, we've got some exciting follow-up targets on the back of some of that diamond work that we did at the start of the year. So, there's a lot of value to add, I suppose, for us as a management team and a board. It's important. My role is capital allocation ultimately. So it's really coming back to how do we best place our money into the various deposits to get the best bang for our buck. For example, there's no point us at the moment drilling Cork Well at depth to add inferred ounces into what might be years 5, 6, 7, 8 of a mine plan. There's, whilst I have very strong confidence that we could significantly increase that Cork Well resource, to what end? If we're not going to mine it for half a decade, there's no point. And it's, in my opinion, a waste of money. So really deploying the capital towards the areas that we think we can mine sooner. So that's essentially the overarching thesis in this program and arguably future programs. However, all that said, nothing's going to move an equity price like a discovery or a pseudo discovery. So we are still very focused on the greenfields exploration in and around that. Like, we've got some exciting, compelling targets, 300 odd square Ks of ground up in that Laverton area that's very much underdone. I touched on previously the history of Brightstar and Stone. And as I mentioned, there's better part of a decade where no work, real work was done. That's an opportunity for us. Linden and both the Second Fortune package and Jasper Hills, again, we're in private hands. There was no need to do exploration. There is limited, genuine, systematic, compelling exploration history on those packages. So for us, super exciting to apply some of our exploration skill sets on those ground, on that ground. So, we've got an exceptional exploration team here. We're very fortunate to get the services of Ed Keys, who came to us from Prodigy Gold, very experienced exploration geologist, and also John O'Goff, who was previously the exploration manager at Musgrave Minerals. Obviously, they got bought by Ramelius last year very successfully. John did a short stint at Ramelius and came to us because, he can see the opportunity here in building something that's got a big future ahead of it. So really excited with the caliber of the guys on the team from a technical perspective, because they're the ones that are going to unlock and add value here.
Oh, I had the pleasure of meeting Jono last week in his first week on the job. He was sent off to the RIU conference in Sydney. I obviously came back with COVID, so I apologise to anyone listening if it sounds as if I've got a peg on my nose. Alex obviously had too strong a constitution to be brought down by a virus, but mate, I reckon that was a really excellent overview of where the company's come from, the corporate strategy and the amount of distance you've covered over the course of the last 12 months to pull this company into shape is super impressive. It's a young management team that knows where they're going, and you're helped by the tailwinds of a very strong gold price, and there's no better evidence of that than the sort of small scale operation that you did at Selkirk, filling the company coffers up with $6.5 million in profit. So, as you say, if that's what a small mining campaign can do, just imagine what you can do with the other 1.5 million ounces that you've got in your mineral resource, and it's growing.
Excellent. I appreciate your time, and thanks everybody for listening. I suppose the the key takeaways I'll leave everyone with is that you touched on the gold price and obviously the record highs and the tailwinds there. I'd argue that you haven't even begun to see any tailwinds in the equities.
That's right.
The small explorers are yet to see it. The bigger cap companies have been the beneficiary of it, logically, because they are producing and do have those cash flows. However, ultimately once that flows downhill into the juniors, I think that's when we can see some genuine equity re-ratings. Multiples of where they're currently trading at. If these companies start going from trading at $10 or $20 an ounce in the ground to 30, 40, 50, which is the historic average and norms, that's when you start to see some genuine opportunities here for shareholders and equity participants. So I'm really excited to be building a business into that landscape. Look, I would suggest that we have been and are going to continue to be very busy. It's exciting. The guys that we've got like working hard, and we're not going to sit still. We're going to build this into a proper business.
Good stuff, mate. Well, thank you so much for joining us. I reckon this is going to get a fair few downloads this episode. You're a company and a guy with a big following out there in the market. So keep your eyes firmly trained on what's happening at Brightstar Resources, and good luck, Alex.
Thanks, Lucas. Appreciate your time.
Good on you, mate.
Thank you for listening to the Corporate Storytime podcast. We're really trying to build our audience for the podcast and aim to deliver regular episodes of our chats with executives from some of the ASX's most interesting companies. If you enjoy the show, please share it with your friends, follow the podcast and give us a like wherever you download it. And if you have any feedback, please drop us a line at info@corporatestorytime.com. Thanks and all the best.